Good afternoon, good evening to all of you. Thanks for joining us for this session. Thanks to the Durgapreneurs team for coordinating this. We're very happy to have the opportunity to spend an hour with all of you wonderful entrepreneurs and want to be entrepreneurs. I understand some of you are aspiring entrepreneurs. So the topic of today's session is really going to be about starting from the basics of how do you build your business plan and pitch deck. So hopefully that's going to be of interest to all of you. It's meant to be an interactive session. So here's how the program is, how I put it together. I'll go through some slides and some materials explaining some points just to make sure that we're on the same page. At the end of the slide presentation, I'm going to reserve about 25 minutes for us to have an interactive discussion for all of you to pitch in and ask any questions that you may have so that we can have a productive discussion around how we apply some of the things that I've been talking about in terms of actually putting together your business plan and your pitch deck, right? So hopefully that sounds okay for all of you. And we are, as you noted, we're recording the session for anyone who might be interested in the topic and who may not be able to attend live today. So with that said, let's start off. First of all, let's talk a little bit about what the definition of a business plan and a pitch deck are from the perspective of the funding ecosystem, which is really the angel VC funding ecosystem, right? What does a VC firm understand when you say, I'm going to send a business plan or I'm going to send a pitch deck? So these two are related, but they're not the same. So typically a VC firm, when you say when they say they're expecting a business plan, they're typically expecting a document, a Word document. In some cases, a PPT is also true. But this is a very detailed document that explains how your business will be operated for the next few years. So it'll have all of the details of how you will execute your, not just plan, but how you will execute your business plan for the next few years. So it's typically quite a wordy document. Most business plans that I've seen tend to run to 10 pages or more, right? In terms of Word documents. A pitch deck, on the other hand, it has a lot of the points that exist in the business plan, but it's almost like an executive summary introducing your business to somebody who doesn't know it. So it's your introductory collateral. A pitch deck is typically structured to work in two ways. One, as a standalone document introducing your business, but more importantly, as the supporting collateral that you will use to talk about your business live for your first meeting with investors. So that's what we're going to be talking about today. How do you put together these two basic related documents, a business plan and a pitch deck? And typically, what are the essential elements that go into each of these, right? Now, this is not intended to obviously replace a deep dive session on either. These are deep topics and there's quite a lot of material to cover. So by necessity, I'm going to only be able to cover the basics and the essentials of each topic, but hopefully it'll give you a good starting point. And as you can see in the agenda, I'm including some useful links at the end, which contain, for example, templates and some very good write-ups on the mechanics of actually putting together pitch decks and so on. From established folks in the market, which you should be able to leverage to put together your own pitch decks if you're starting from scratch. With that said, let's jump into what a business plan is, right? And what are the key elements of a business plan? Now, given the group of entrepreneurs here, I'm sure there are very diverse types of businesses that each of you runs, right? Some of you may be business to consumer businesses. Some of you may be what we call B2C. Some of you may be B2B, where your main customers are other businesses. Some of you may be direct to consumer. Some of you may have a more complex B2B2C kind of a strategy. So there may be many different business models that you have. You're also obviously in very different business industries, right? So some of you may be tech startups, some of you may be manufacturing startups, some of you may be services startups, and so on and so forth. So there could be many different domains that you're part of. But fundamentally, if you really look at the key elements of every business's plan or the business plan for each of your businesses, there will be certain things that are common, right? Which you need to think through as an entrepreneur, as your thinking about what the crucial elements of your business are. And the first one is fundamentally, what is it that you offer to the market, right? What is your product or service value proposition? And by value proposition, we'll be spending a little bit of time talking about this, but essentially, this is what you talk about when you're trying to explain your business. Let's say that you run into a really important potential investor or a really important potential customer in an elevator, and you have just a few seconds to grab their attention. You want to tell them everything about your business. These are the product or service value proposition fundamentally is the 1 or 2 sentences that you will use to introduce your business to them, which tells them everything that they need to know about your business. And we'll in a subsequent section, we're going to spend some time talking about this, right? The next logical thing is who's your customer target market. Very often, there are some great product ideas, particularly, for example, we see quite a lot of great technology startups which are incubated in university environments, or university accelerators or incubators or university labs. And very often there's some very nice technological advancement or innovation that the team has thought of. But where they run into trouble is they can't figure out who is actually, which customer, which segment of customers is willing to actually pay them money to buy that product or buy that service, right? So it is extremely important to figure out who's the target customer market. In other words, people who will consistently be willing to pay for the product or service that you offer. And that drives a lot of how will you reach them, how will you build your business, and so on and so forth. The third element, you're not obviously selling in a vacuum, right? Other people are selling products and services to this group of people who need this service. So what's the void that you're trying to fill? So who are your competitors, and what's your positioning vis-a-vis those competitors is something important that needs to be part of your business plan. The next bit is all about money. How will you make money? How much money will you make? This is your financial forecast. This is how do you actually transact? How do you collect money? How do you pay money to your suppliers, and so on and so forth. And finally, the last element in the business plan is what happens next. And by this, I mean, what are you going to do over the next 3 months, 6 months, 1 year, 2 years to execute your business plan? What are the key milestones of your business? Particularly for a startup, this is extremely important, right? How are you going to execute over the next, in the short to medium term, on your business plan? So these are really the key elements that are part of every single business plan, or should be, especially if you're looking at submitting it to a potential investor. So we're going to be spending a little bit of time on each of these segments. And don't worry if you feel like I've, covered something a little fast. As I said, we're reserving about 25 minutes at the end for you to ask questions, and I'm happy to answer those. Don't wait till the end, by the way. If you have questions, or if I'm not very clear, or you're not very clear what I'm saying, feel free to type a question into the chat window, and we'll get to them as soon as we get to the Q&A part of the segment. All right. So let's start with that product or service value proposition that I talked about, which is super important, right? First of all, what is this need that your product or service, your business, what is the gap that you're filling that's not currently being satisfied for customers? In other words, why are they going to be willing to buy this solution, right? The next logical element is who is buying your product or service. And this is where it's important to be very, very clear about who your customer target segment is, or you may have multiple customer target segments. Again, clarity is very, very important. The third bit is the solution. What is the solution that your business puts together that solves this fundamental need for this set of customers, right? The next bit is actually related. You'll notice that I've said benefits and features rather than features and benefits, and that's on purpose, because it's very easy to talk about the features of your product or the features of your solution or the features of your service. But what is really important, and the bit that you really need to highlight, especially to investors, is what is the benefit that your product, your service offers to customers. So, no matter this again is a thing that I see in a lot of tech startups where people are very keen to talk about the features of their products and how the features make them so different from the competition and so on and so forth. That's all very well and good. But if you don't explain why them having that feature is so beneficial for the customer, what good does it do the customer? It doesn't mean much. So features and benefits should always go together. So it's, and believe me, if you have benefits in your pitch deck and your business plan, you're already differentiated from 90% of the startups out there, because people just forget to talk about benefits. People talk about features, people just forget to talk about benefits. So this is very, very important. And I really feel like I can't say this enough. Um, Believe me, if you put a benefit statement in there, and it becomes self-explanatory, the investor really gets it, saying, okay, I understand why customers really would want to buy this product. And it sounds super simple and basic, and yet, as I said, 90% of pitch decks that I see don't have this clearly stated. So it is important that you focus on that. And related, what are the advantages of your product and solution? For example, it could be as simple as, my solution is more cost effective, and that's fine. Or you could say, my solution is much easier to use. Or you could say, my solution is available, the other alternative competition takes 2 weeks for the solution to be put together and delivered to the customer. In my case, I'm able to get it to the customer the next day, right? So whatever your advantage is, that is also important for people to include in the pitch deck. And when you put all of these elements together, that key element that I was talking about, which is the value proposition, that's what it is. It's the need that you're solving, the solution that you put together, the features and benefits of your product or service, and the advantages to the customer. This put together is your unique value proposition for your products and services. And remember what I said. If you're meeting somebody at a dinner party, let's say, and you're trying to explain to them what your business does, this 1 or 2 sentences max is what you should ideally be telling them about your business. So when they hear that, they say, okay, wow, I really understand everything about this business, and I think this is interesting, and I want to hear more. So it is extremely important to think through this. And it may sound easy, but I know it takes a lot of work for most businesses to put together this value proposition statement. So it is important that you spend time and you think through this with yourself. You may be a solopreneur, you may have a team. It is important that you and your team collectively spend time together and work this out. And you may end up refining this, because various elements of this may change. So for example, your product will evolve based on customer needs. Your customer target market may change. Your target segments may change. You may actually introduce new benefits for customers, and you may develop new differentiating advantages in your product. So the value proposition may get updated, but it is important that you have it, and that you have clear sight of that, and that you're able to communicate it very simply and clearly to potential investors and to potential customers and anyone who wants to know something about your business, right? So next, we talked about customer target market. And again, this is something that I wanted to just highlight a few things that I see people not doing very effectively in their pitch decks, right? So first of all, I'd say, yes, absolutely. You will see slides which have a lot of market size data in terms of, this is the size of the total market. This is the size of, you'll see a lot of abbreviations like TAM and TOM and so on and so forth. And we'll talk about it in a little bit. But fundamentally, what you're trying to explain to customers is how much market share in the serviceable market are you really trying to obtain. And to put that even more simply, what we're expecting as investors, as VCs from startups, is not necessarily a hyped up huge potential market size. What I'm interested in is, okay, this is the total market that I'm playing in. This is the market that is technically as accessible to my company with the products and features and the channels that we currently have. The center bit, or the smallest bit of this subsegment, is the bit that I'm actually going to be able to immediately address in the near future, starting from now for the next 2 to 5 years, through the channels and resources that we have. And we're targeting to get a market share of X rupees or X percentage of this sort of final sort of targeted obtainable market, right? So what we also do want to see is not just I'm aiming to get a 10% market share. Wow, we have a $50 billion market share. Imagine if we could just get 1% of that, we'd be doing really, really well. That doesn't mean anything to me. What I really want to see is a grounded, realistic explanation of how you will explain, how will you actually get 1% of that market. In other words, how will you translate that to a certain number of customers, each paying you X amount, to actually get to that 1% market share. That's the important part. It's also important that you clearly explain in your pitch deck who your customer is. Especially if you are a B2C customer, it is important to define them in simple language, but to make it very clear to investors who the target segment is. This will become easier to explain. I'll give a couple of examples in just a moment, but that's fundamentally what we're looking for. And finally, what's your go-to-market plan? So how will you, this is the target segment, this is the market size, how are you going to actually obtain that market share? This is your go-to-market plan. In simple terms, what is a go-to-market plan? Some of you will have read about the very classic, there are different ways of doing this, but fundamentally it boils down to the 4Ps model of marketing, right? So the 4Ps model is simply product, place, promotion, and pricing, right? So that's what your go-to-market plan is. How will you actually, what is your product strategy? How will you price your strategy for different customer segments? How will you distribute it? And how will you promote it to get customers' attention? These are fundamentally the elements of your go-to-market plan. And when it is important to also highlight, which is why I've included it in the slide, if your product portfolio is evolving, right, and you're introducing new features or new products or new SKUs or new options, what are you offering? How is this increasing your customer base? How is this increasing your market penetration, your reach, et cetera, et cetera? And from a timeline perspective, we do need to see a sort of a simple timeline of when are you actually doing this? What are you doing in the next 3 months? What are you doing in the next 6 months? What are you doing in 9 months? What are you doing over the next 2 years? And so on and so forth. So fundamentally, this is the data that we want about customer target market. I'll talk about a couple of examples in the next subsequent slides about this one. So for example, if you want to see a simple depiction of market size, this is quite a good slide because it clearly differentiates on the right-hand side graphically what your target market is in terms of sizing. And on the left, you'll notice that it actually explains who the target market is. It defines that, okay, we're looking at users who are between 25 to 45, financially savvy. This is a good example of how to actually talk about this element of customer target market, right? It has the right amount of data for a pitch deck. Or you might put it in this way, right? So, explain, as I said, what your total market potential is, what is the sub-segment that is potentially serviceable, and what is the final, the part of market that you're actually serviceable and obtainable by you in terms of the channels that you have, in terms of 4Ps, the GTM strategy that you have, and therefore this will drive whatever market share you're trying to reach, right? The next element of your business plan is competitive positioning. Remember, I talked about this. You're not selling in a vacuum. You have products, you have services, you have competitors selling other products and services to your target customers. So I do want to be very clear, though. It is important that you do this exercise internally and do the analytics internally first. I'm not saying that you need to put this table in your pitch deck. In fact, don't do that. But the competitive positioning analysis that you do internally will start off looking something like this, right? Fundamentally saying, okay, what's our competitor one, competitor two, our business, what's the value proposition of the competition, what are the core products and services that they're targeting customers with, what are our differentiators and so on. So this is your internal analysis that you will do. And then once you've done this and you figured out, how you can actually, what gives you the advantage over the competition, you're going to take elements of this and you're going to include this in your pitch deck as your competitive positioning, right? So good examples could be very simply explaining that, hey, our product, it's priced below. So this is a great example because it's very simple and tells people, investors, what they need to know. So we make task management tools. My company makes task management tools. Our product is priced below that of other task management tools. The competitors, in case of company A, the product is more expensive, right? In competitors B and C, the product is more expensive and it's harder to use. In companies D and E also make cheap products, but their products are difficult to use. So on the left side, we've talked about exactly why our product, why customers will choose our product or will want to choose our product versus all of these competitors, because it's simple and easy to use, it's cheaper, for our target segment of consumers, affordability is the main draw. So essentially, that's pretty much, it's a good example of what to put in a competitive positioning slide, includes all of the key information that investors need to know to understand your business. Or you could put it in a graphical format. You can actually, draw two axes. This is quite common. And I quite like this format as well because it's very easy for you to explain what exactly differentiates your products. There could be various ways you do this, but I would urge you to try and simplify as much as possible and explain just the key elements. Remember, I often see that whole table with, there'll be 6 competitors and dozens of lines, and, you'll be talking about features that are there in and honestly, it's Greek and Latin to the person who's looking at that slide. What we really need to know is what impacts the customer in a way that makes them choose your product versus the competition. So it should be as simple as that, and you should just be explaining what are the key top 2 or 3 things that will make the customer choose your product or choose your service, not giving a laundry list of all of the features that the competitors have and the features that you have and why your features are better. What we definitely do not want to see is a list of, as I said, 20 rows and 6 competitors and an extremely hard to read segment with like green tick boxes in your column and red check marks in the other column. That doesn't tell us anything meaningful. So I'd really like to see that kind of slide disappear from pitch decks. Next element, business model. So this is down to the brass tacks, right? What kind of business model do you have? And you're trying to explain this again as simply as possible. So what is your business model? It is, what are your core products? What are your products? What are your pricing? How will your business make money and how will you get profitable? How will you reach your customers and how will customers find you? What's your promotion strategy and what's your marketing and sales strategy and so on and so forth, right? How do you make money? And how do you make profits is your business model. So what will you include in the pitch deck? You're going to include key financial statements. Now, the standard is what all VCs and investors are expecting to see in a pitch deck are fundamentally some combination of these 3 things, which is your revenues, your profitability, your EBITDA, and your cash flows. Now, personally, increasingly, I'm seeing VCs don't necessarily need to see cash flow in your first pitch deck. We're happy to see that, at a later stage when we're having a deeper level of discussion. But it is important for you to show your revenues and your profitability growth. And it is very important to explain the key assumptions that are going into your forecast statement. It is important to put your forecast for 2 to 5 years, right? Ideally, minimum 3, frankly, because if you have a two-year statement, that's probably too little for us to understand what your growth is going to look like, particularly if you're a very early stage business. So 3 to 5 year statement is what we're looking for. We are looking for key assumptions so that we understand the logic of how you're actually forecasting those numbers. It's also a lot of startups forget to include non-financial metrics, right? It is important for people to understand other things about your business, other metrics rather than just the financials. So do please include, depending on the nature of your business, the key metrics could be different, but your business will definitely have some KPIs and some key performance indicators and some key metrics. It may, if it may be very, very important for you to explain unit economics. It may be very important to include and explain. Now, I'm not saying necessarily include all of this stuff in your pitch deck. Depending on the complexity of your business model, it may not be ideal to include all of it, but be prepared to answer questions around this because this is something that investors will ask you about during a pitch deck discussion. And finally, how will you show all of this? Please use as much as possible charts and graphs. What you should not be doing is taking the Excel of your financial model, copying the table from that and pasting it into your pitch deck. That is absolutely something you should not do. You should make an attempt to simplify it because one, that's very, very hard to read. And believe me, it's an area where I've often seen founders stumble when actually delivering the pitch deck because in the nervousness of the moment, even the Excel format that you thought you knew really, really well, it's hard to read, it's hard to see on the screen. And there the founder is kind of peering and trying to say, okay, what does it say in column D, row 6? I can't quite make out what that number is or what that heading is. And it just, will throw you off. So simplify, simplify, simplify. When you're actually doing the numbers and the projections for this, it is important that you try and make it realistic. There's a temptation to kind of overhype and build up both, your growth rate and the numbers you can make and the profitability that you can make. If you try to overinflate this is not going to serve you well, particularly in the last 1 year. I think there's a certain sobering realization that has hit most of the people in the market. So you're going to see a lot of skepticism if you have very overinflated numbers. Secondly, it is important to show the data over time. So what I talked about, that whole 3 to 5 year time frame, we don't necessarily, because if you're an early stage business, data that you're telling me about how you actually do today is not going to be meaningful enough for me to understand how your business will grow in future, because you may be a very early stage startup. So if you're saying that, I'm making 50,000 rupees of revenue today and my costs are only 25,000 rupees, that's not enough information for me to understand how your business will do in future, because you may not be spending anything on marketing yet. You may not be spending, or you may be spending very little on staff expenses. As you grow, I need to understand how your business will change. Excuse me. Excuse me for a moment, folks. I'm just going to get a drink of water. So as I was saying, it's important to show the data over time, because data that you're sharing about your business today may not be enough information for us to understand whether or not your business model will make sense for us as investors to look at, right? So some good examples of how to show your financials. This business model example is a good example because it has a very simplified graphical way of communicating how the business model works in terms of, when the money comes in, how much goes where, how much actually stays with the company, how much goes to your partners and stakeholders, the ecosystem, and so on. So I'm not saying you need to do it exactly this way, but this is a good example of how a fairly complicated to outsiders business model can be simplified and depicted in a simple and easy to understand way, right? So try and simplify like this. Another good example of, I like these slides because these are fundamentally, this tells me enough about the business. It shows the revenue growth. It tells me enough about how many customers we're going to have, how many orders, what's our gross revenue looking like, what's our net revenue looking like. So again, you don't have to exactly replicate this, but this is a very simplified way of explaining numbers. So I like this format a lot. So I encourage you to use a simplified format like this to show your numbers in the pitch deck. The detailed numbers will come, trust me, but it's not typically happening during a pitch deck session. Now, fundamentally, the other thing that I should, and I'll talk about this more later, but I want you to really think about what the purpose of your pitch deck is. It's not like Shark Tank, where, if somebody makes a pitch and, you think that at the end of the 15 minutes, the investor says, hey, I love your product, I'm going to give you 2 crores. It does not work like that, right? The purpose of your pitch deck is fundamentally for you to seek a deeper conversation with investors, saying, okay, this business sounds interesting, this team sounds interesting, they sound like they're doing interesting work and they could potentially grow to be a great business. So I want to look at them as and find out more about their business. And I feel like this is something worth exploring. The outcome that you want from a pitch deck is simply that. Nobody actually gets a check at the end of making a pitch. Okay, so what you want from your pitch deck is enough interest from the investors for them to have a deeper conversation with you. That's why you shouldn't try to cram too much information into your pitch deck. And we'll talk more about that too. Here's another example of what I think is a good way to actually depict your financials. Now, what's happened here is pretty interesting. Somebody's taken the data from the Excel and put it into a very simplified format here, which I like, which is fine. As I said, just don't put the Excel sheet in here. But if you want to simplify it and depict it in this particular way, that's perfectly fine. It has all of the essential information and it explains it in a very simple, clear way, and it's easy to read as well. So this is, again, a good example of taking the data and putting it in a very pitch deck friendly format in an easy to understand way. I'm noting there's stuff happening in the chat. I'll get to that. I'm not yet looking at the chat window, but we'll definitely get to it during the interactive session after this. There's a little bit more material for me to get through, and after that, we'll get to the chat and we'll get to your questions. Okay, finally, what's next in the action plan? So it is important. Please do, especially if you're raising funding, your pitch deck is for raising funding. Please don't forget to include how much money you're raising, the timeline for your praise, any previous funding rounds that you've done, and then how you're going to use the money, right? What are you going to do with it? And by this, I don't just mean put in a pie chart saying I'm going to spend 40% of it on marketing, 20% of it on hiring staff, 30% of it on IT, blah, blah. That's not enough information, right? What will differentiate you as a business is, okay, you're investing 40% more on marketing in order to do what? It should say something like, okay, I'm going to put 40% more in marketing, and this is going to help accelerate sales growth from the current 25% per year to 40% per year, something like that. In terms of what is the outcome that you're going to get for having spent the money is something that you should be talking about. Not just I'm going to spend the money to do XYZ, but by doing XYZ, I'm going to get ABC, right? That's important. And finally, you'll notice that I've all of the other stuff that goes into your slide. These are the table stake, the hygiene level information that you're going to have to include in your deck, right? Which is who's your founding team, who's your team, what's your product roadmap, what's your tech strategy, and everything else that I've talked about in the previous segments. This is what I call everything else. It's not that these are not important. They are important. We do need to, for example, who's the founder, who's the founding team, what's your strategy, what's your roadmap, all of that is good stuff. But that has to be included anyway. It's, right? So that's why I've called it everything else. And frankly, that should be the easiest for you to put together and make sure that you include in the pitch deck. So that's fundamentally it. I'll just kind of give a few more examples before we get to the Q&A segment. So for example, growth strategy, keep it very simple, right? What are we going to do by Feb? What are we going to do by May? What are we going to do by October once we've raised the money? And so on. Or it could be something very simple like this, which shows a 2-year action plan. So, what are you going to do over the next 2 years, especially if you're a very early stage startup who doesn't have actually and what you call an MVP or a minimum viable product yet. This could be a good way to actually show what you're going to be doing over the next 2 years. So keep it simple, make it easy for the investor to understand by just looking at the slide, right? Or you can have a now, next, later roadmap. It's perfectly fine. What are you going to do now in the next 6 months? What are you going to do later in, let's say, the next 1 year? And what are you going to do after the next 18 months? This is a perfectly simplified and fine way to depict it. You can also have product roadmaps that look like waves. You're getting the idea. I'm not saying that you have to do exactly this, but the whole idea is to simplify and show what you're going to be doing next over the next 3, 6, 18 months. The next 18 months are particularly critical for investors to understand once you raise the money, because we really want to know how is raising that money going to impact how you run your business, and how is it going to actually improve your ability to be successful. So the next 18 months are really, really critical for you to explain in this segment, right? And finally, let's get to the do's and don'ts. One, you'll see that big call out on the slide. Definitely do not include any slides that look like this one, which is like a bunch of text and a bunch of bullet points that people have to peer very closely at the screen to read. So this is fine for me because we're doing an informational session and I'm going to be sending you the slides. So I want you to have this material to read, but your pitch deck, no slides should look like this, right? So one, do keep your pitch simple. I know you spend a lot of time running your business, understanding every detail of your business, all of that. But for the pitch deck, keep it simple, high-level ideas, leave lots of room for questions because that's what you're looking for. You want investors interested enough to ask you questions. Secondly, tell a story. Tell the story of your business. See, human beings are at the, your audience is human beings. They're also looking for emotional connections, right? Don't just tell the facts and figures. The pitch deck should build some sort of an emotional connection or provide the listener, the investor, an ability to connect with you, to connect with what you're doing. One of the best ways to do this that I've seen is time and time again to tell stories about how your customers are using your products, because that actually illustrates, okay, wow, this is the experience that customers are going to have. I get why customers are going to be attracted to this product or service. I get why more customers will buy this. And I get why this business will grow. So that's a very powerful way of telling stories. Do keep your deck current. So very often, I know it's hard, right? Being an entrepreneur is a tough job. It's a 24/7 job. And you're running around doing lots of things. But when you're actually going out and asking for funding from investors and you send them a deck which is clearly outdated, it could be, and it's very easy to make out as an investor when I see a pitch deck saying, hey, I'm looking to raise 2 crores, but then I see that the data that they put in their financials is 2 quarters old. Then that kind of immediately says, if this team can't be bothered to give me the latest numbers about their business and telling me what they're up to right now, why would I be interested enough to consider investing our money in them, right? So it is extremely important. I know it's hard, but when you're sending out pitch decks, you're going to have to do many, many pitches, right? And after this round, your next round will come around. And then after that, on next round, and then eventually you'll go IPO, and then possibly you'll be talking to analysts every quarter about your business. But the whole point is your pitch deck will need to be updated. I know can be painful, but don't neglect this. Do not send an outdated pitch deck. I can't emphasize this enough to any investor. Do not make an outdated pitch to any investor. So make a conscious effort to keep your pitch deck current. And it does help if you have a simpler pitch deck because there's less stuff to update, right? So just be mindful of that. On the don't side, as I said, the first and most important things, don't put any slides that look like the one that you're seeing on screen. No text and data overload. Please use graphics. Please use large fonts. Try to keep no more than 3 to 5 points on each slide. Use images wherever possible. Remember, you're trying to build an emotional connection with your audience. Secondly, do not overstate, as I said, don't hype the market opportunity. Don't hype use publicly available data, but don't try to overhype everything, right? Particularly now, it's not going to land well. Don't oversell anything. Don't present your business. Try to be realistic, because we do appreciate that, particularly now. I think there was a lot of hype in the market, and we're kind of seeing the downside of all of that hype. So people who are presenting more realistic, grounded in reality plans are getting a lot more respect and attention from investors. So try to keep it realistic. Be optimistic, but don't be overly optimistic, right? And finally, don't ignore key risks when you're presenting the slide. Even if you don't need to necessarily include key risks in the slide, but be prepared to answer questions about them. So one of the most common questions that you will get asked is, hey, okay, it looks like you've got a great product, but what if a competitor comes in 6 months and comes up with a similar product? What are you going to do then, right? So you don't need to have this answer in the slide and in the pitch deck, but please do be prepared to have a realistic answer for that question, because it will come up. There's no business which doesn't have risks, and startups have enormous amounts of risks, right? And every business has to go through pivots and makes changes to remain dynamic. Most successful businesses do this, right? So do not feel that you have to present your plan and defend it as being perfect. It's much more realistic and much more valued for you to have, okay, we understand this is a risk and this is our plan to address it. And that is something that your investor will be much more impressed by if you have that particular attitude. And that was really all I had to present. So let's actually pivot to the more sort of interesting element of our pitch deck, which is to questions. I'm going to jump to the chat window. And I'll start top down from earliest to latest. Okay, so Baswati has asked, how does the value proposition differ in case of social services? I mean, change makers. A few common points are obvious in the pitch deck. However, what is the focus area for us? Thanks. Okay, Baswati, can I ask if you're comfortable? Would you like to unmute yourself? I'd like to ask a little bit more about your business. So tell me more about what it is your startup does.
Sure. Hi, Divya. Hi, everyone. Myself, Ashwati, leading Kalpana. So Kalpana is a social service group based on Kolkata. And basically what we do, this is totally women-led, and as I said, run by totally women, all women, from 8 years to 80 years. Okay. So what we basically do, we work for the weaker section of the society. I mean, the women for their vocational training, their adult literacy program, and then for the street children, providing their education, sponsorship, putting in the schools. And of course, what is main focus area for us, working for the mentally challenged brothers and sisters in different homes who are actually vagabonds. So for me, what I understood, yeah, it's a really interesting area you talked about. But our pitch deck, of course, will differ because of the target audience, fundraising. So how you just make us understood like this? Because only the fundraising point will not be there. Storytelling is an important role over there, and how we change the slide, make it interesting.
Sure. No, I think that's a great question. So fundamentally, Vaswati, can I also ask you, are you a for-profit or a non-profit enterprise?
It's non-profitable.
Okay. So again, I do want to caveat this, because this whole pitch deck was designed to talk about how do you actually present a pitch deck to for-profit venture capital investors and so on, right? So of course, there are some categories. So for example, there are venture philanthropists who also do invest in social enterprise and so on. So I do want to caveat, Sathi, as you correctly picked up, a lot of the stuff that I've talked about in the slide are not really designed for not-for-profit and social enterprises. But with that said, there are some common elements. So let's start with the things that I think are most important. Fundamentally is, when we talked about the value proposition, the value proposition in your case would be, it's not so much about how will we sustainably make profits doing this business, but how will we sustainably deliver benefits to our target beneficiaries while also, remaining sustainable as a social enterprise. And that's how you would probably have to tweak the value proposition, right? And when you're actually going out to raise money, I'm assuming you're talking about CSR funding or donor funding rather than sort of investor funding, right? So you're not actually looking to people to buy into part of your business. You're looking for periodic sort of fundraising. So in the same sense that this deck, for example, even if you look at a for-profit, I'm not going to say this is the same deck that you would do to pitch to a customer who's going to buy your products. Let's say you're a B2B customer. This is not what a pitch deck for a customer looks like. So in the same sense, you're absolutely right. There will be some things that are relevant to you, like value proposition, but how specifically would really be, again, it comes down to the whole purpose of the audience for this kind of pitch deck that I've been talking about is venture capital investors, risk investors who are going to come in and want to buy into an early stage for-profit business with the ultimate goal of what? To sell that stake at a profit themselves, right? So that's how I've been talking through this session. So absolutely great question. There's a whole other, set of lessons that we can talk about in terms of how to actually put together an optimal fundraising deck for a nonprofit. Unfortunately, that's not what this session was designed to be. So hopefully you'll still get some value out of the session. But honestly, this is you're not really the core target audience for whom I'd actually put together this material. My apologies. But again, great question and thanks for calling it out.
Yeah. Thanks.
Sure.
Thanks so much.
You're very welcome. So let's move on. Okay, great. So Ananya has asked another fantastic question, which is, hi Divya, can you explain key assumptions for key financials with some examples? Great question. And, perfect. I did go through that section really, really fast. So for example, when you're actually talking about revenue growth, right? So let's say that you're starting with 1 lakh of revenue in the current fiscal year, and you're saying that you're going to go to 2.5 lakhs of revenue in the next fiscal year, and you're going to grow to 5 lakhs of revenue in the following fiscal year, etc. Right? And that's what shows up in your revenue growth statement. What we mean by key assumptions underlying that is to illustrate how that will happen. So for example, that example slide that I showed you talked about how many clients, how much average money are they paying you per year in order to get that. So essentially, we want to explain the underlying number behind that 1 lakh to 2.5 lakhs to 5 lakhs, right? And any other key assumptions that you're making. So for example, you may be, a key assumption that you're making is we're raising funding and we're going to be able to raise our sales force from its current 1 salesperson to 5 salespeople. That's a key assumption as well, right? So those kinds of things which actually impact the practicable reality of making that number growth happen is a key assumption and needs to be included. If not directly in the slide, you need to have that as your backup material so you can explain saying, hey, okay, wow, you're growing at 500%. How is that happening? So you need to be explain that in simple language, saying, yes, it looks like an ambitious number, but it's possible because of these are the assumptions that we made, and this is why we believe it can be done. So that's what I meant by key assumptions for key financials with some examples. The key assumptions would typically be of, either impacting your revenue growth or impacting your margin growth or impacting your expenses and how those are changing over time. So for example, you're suddenly spending a lot more money on sales. The key assumption behind that is you're hiring a lot of salespeople or you're actually appointing new channel partners and paying them commission, right? Those are key assumptions. So those need to be explained, or at least you should be prepared to explain them when people ask you saying, hey, that looks like, wow, why is your cost of goods sold suddenly going from, it used to be 30%, but it's suddenly 60% in year 3. What's happening between year 2 and year 3? You need to explain that. So those are examples of key assumptions. Does that make sense, Ananya? And feel free to unmute yourself and ask a follow-up question if you'd like.
No, I think that is super helpful. Thank you. What I understand is we cannot just quote numbers. We have to go through it very rationally and explain how we are coming to those numbers. Thank you so much.
That's
That's very
exactly
helpful.
right. Perfect. That is perfectly stated and exactly what I meant. Thank you.
Thank you.
Cool. So great. Moving on to Stuti's question. Stuti has asked, can you please advise on how pre-revenue startups should approach financial projections? To be specific, my startup, Mine Electric, or Mine Electric, or Minor Electric, please correct my pronunciation later on, is developing a cutting-edge battery technology, and we are raising funds to go from MVP to product. While we did conduct an exercise to get 5-year financial projections, our product is expected to be launched in the market post-2025. In such a case, are the projections relevant? Should we just add our expected unit economics and gross margins? Yes, fantastic, great question with the right amount of detail and gives me the opportunity to actually explain a lot. So thank you for that. First of all, though, I mean, Stuti, would you mind unmuting yourself and telling me how you pronounce your startup's name?
Hi, Divya. It's Mine Electric.
Okay, it's Mine Electric. Brilliant. Okay, so great question. So particularly, I think you're a sort of a technology startup doing a lot of R&D. You haven't developed your MVP yet. This is a fantastic question. So the simplest answer to, do we need financial projections? Yes, we do. Right? We do need particularly the next 3 years of financial projections. I mean, again, investors are not stupid, and entrepreneurs are very smart. You do know that a lot of things will change between now and the next 5 years. So we know that things will change. So I mean, nobody is going to hold you to, oh, you haven't met the number that you said in Q3 of year 4 has not happened exactly. Nobody's going to do that. So don't worry about it. What are we trying to look for as investors when we see these financial projections? One is we see the potential for an interesting and potentially rapidly growing / profitable business, which makes it worthwhile for us to invest in, so that we can have the confidence that, okay, after we've invested this money and you've grown to a certain stage, hopefully we'll be able to exit that investment by selling our stake at a profit. That's fundamentally what the investor is looking for, right? So that's the kind of data they're looking for. So they're looking for generally size. What is the potential size that your startup would grow to? They also are looking for things like, and this is very important, do you understand the costs of actually getting your product to market? How realistic are those assumptions, right? So we are looking for, so when you're actually looking at expected unit economics, what's even more important than the actual numbers is we want to get an insight into your thought process of how you got there. What assumptions did you make? How realistic are those? What did you talk to customers? Which customers did you speak to? What are they telling you? And so on and so forth, right? So it is very important to have projections. It is important to, and this is where when you have this won't all happen within the pitch deck, but the quality of the discussion that you have with investors, once they're interested enough to have that discussion on these elements, would be very, very critical. So it's very, very important, particularly for, I'm assuming your product is fairly R&D intensive, because it does take a lot of effort and trial and prototyping to get a product like this to market. You'll probably end up doing more than one pilot, hopefully with potential customers and / partners, right? So use that experience in those discussions to build a good level of detail, and do a lot of scenarios. For you, I will say, it is important to have 2-3 scenarios in your financial projections. Don't include all the 3 scenarios in your pitch deck. Put the most sort of realistic one that you want to put in there, but also explain when you have the follow-up discussion, say that we've done scenario 1, we've done scenario 2, we've done scenario 3, this is what it looks like, and this is where the assumptions change. That will be of immense interest to investors. Again, Stuti, I've kind of gone through this. In your pitch deck, final point, should you just add your expected unit economics and gross margins in the pitch deck? I would say yes, you should. And heavily asterisk that, saying that we are expecting this to be the unit economics once we've been in operation and in the market for X number of months or X number of years, right? This is the point we want to get to, is the number that you want to explain. So again, great question. Hopefully I've answered it. I'm happy to answer any follow-up questions if you have.
Yeah, Divya, I have just 2 follow-up questions. One is, you mentioned about scenario 1, 2, 3, and while doing our financial exercise also, what I was able to understand was these 3 scenarios are typically termed as worst, normal, best conditions. But is like, how do we actually frame these scenarios? Should we look at product related milestones to determine that, okay, if we achieve this level of progress on our product by this time, this is scenario 1, this is scenario 2, and this is scenario 3?
That's one way of doing it. I would say that certainly if it's a very capital intensive product, then that is one way of framing it, to actually say product milestones or product development milestones are the way to go. But I would actually always advise, where possible, to make it a sort of a customer oriented milestone instead.
Okay.
To say that, okay, assuming we have got the product and we've we managed to get these customers to buy into the product, this is the scenario we're looking at. Assuming things go better than that, this is the scenario we're looking at. Assuming that things are worse than that, this is the scenario we're looking at. Because again, from an investor standpoint, while we're interested enough in your technology or your development process, the really interesting bit to investors is, okay, when you start making money, how much money will you make and how fast and how profitable will it be? So wherever possible, keep that in mind, because it's important. The first rule of communication or marketing is think about your target audience. Who's your target audience in this case? It's a bunch of VCs who want to make money. Right. So give the answer also in terms of what they want to hear. Now, this answer will change slightly. Let me caveat this. I'm sure you're doing this. When you're going out and looking for government grants, when you're looking up, for different sources of non-dilutive capital, etc., you may want to, you don't necessarily need to, emphasize the same things, right? There you will want to highlight your innovation and the impact and all of that. And by the way, even for investors, don't neglect the impact metrics, right? So for example, our product is going to deliver this kind of impact in terms of savings, in terms of cost, in terms of, whatever, I think less waste or cost of disposal of whatever your benefits and differentiators are. Don't forget to include the impact metrics as well. But that's fundamentally the rule of thumb.
Understood.
All right,
Thank
you said you had another follow-up question.
Yeah, just one more thing. So, you also mentioned that we should have, like, we can't put everything in our pitch deck because that is expected to be a concise document. So, we will have
Correct.
some backup material. So, is
Yes.
it advisable to put additional slides as maybe appendix, or should we like put links to separate documents, maybe one that explains our financials in much more detail in the pitch deck itself? Like, does hyperlink is effective?
Right. So depends on the context. So for example, if you're sending out your pitch deck first before meeting any investors as an introductory document, one, don't even put in an appendix and don't put in any links to additional documents. If it's the very first collateral that you're introducing, don't put in additional material, either an appendix or a document, right? If you're doing this at a live pitch deck session, you're using this pitch deck and you're trying to use this as a collateral to explain your session, by all means, feel free to include a few appendix slides, right? So that in case they ask you, you can pull those up and use them as a collateral to answer that particular question. But what you're really aiming for is that in-depth one-to-one session with that investor group, right? For which, and at that point, trust me, the investor will ask you, can I see the actual projection numbers? Can I see the worksheet? And that's the point at which you can actually share the files with them, saying, okay, here's our model, here's the Excel itself. This has our model, and this is what you can look at. You're going to put together a due diligence package, right? Or a sort of a pre-due diligence, an early screening kind of information package for investors. Have those ready. I would, in general, unless asked for, don't include them by default in the deck. You want people to be curious and ask you for more information. Don't just give them that information just for free, right? You want to elicit that because it's a signal of genuine interest. Otherwise, you're just kind of giving that information, somebody is just kind of skimming over it. It's of no value to.
Understood. Thank you so much, Divya.
You're very welcome, Stuti. And very interesting startup idea, by the way. I mean, so all the best. And at some point, send our fund also invests in clean tech. So send me the deck.
Definitely, for sure.
All right.
Thank you so much.
You're very welcome. Moving on to the next question. Let me do a quick time check. Just Gunjan and team, we have about 6 minutes left. I hope we're doing okay on time. I think I'll have time to answer the remaining questions, but do flag me in case you need to stop me to do a wrap up or anything like that. Okay, so let's go to Shoyanika's question. Due to network issues, she's testing the question. Kindly confirm the type unit economics through which we can attract investment. This forecasting strategy will work if we are doing pilot testing only. Okay. Shanika, I know you're having network issues and I don't know if you're able to unmute yourself. But unit economics will depend on the type of business you have. So for example, if you're a B2B business, then the kind of unit economics that you will show will be looking different than unit economics that you do for a pure B2C business, right? So for example, but unit economics also has certain fundamental logic. Mostly we will want to see, again, what are investors looking for? We want to say that as you're growing in volumes, hopefully your unit economics are going to make more and more sense from a profitability standpoint. That is, you're able to sell more at a lower marginal cost per additional unit, or at a lower marginal cost per additional customer. Now, the unit will differ based on the kind of business you have. So, for example, if you're a services business, then rather than per unit produced, you might be thinking of per customer serviced, right? Or if you are a manufacturing business, then you may actually be thinking in terms of per block of produced material. You may be thinking in per ton of material, or you may be thinking in if you're a construction business, you may be thinking in terms of per building project. So the unit will differ based on your kind of business. Will forecasting strategy work if you're doing pilot testing only? You do need to have some forecasts at that stage, even when you're doing pilot testing, like Stuti was talking about, right? Pre or MVP, you need to have some construct, even in your own mind, saying, okay, when we're doing this pilot testing, if we are successful in this pilot, what is it going to help us to achieve? Where do we get to? It does require work. And if you're looking at raising money, again, think about what the investor wants to know. If you're looking at debt financing, then you may be fine just doing forecasting for the pilot itself. So, for example, you're a renewable energy company. You're saying that you're going to set up a micro solar project in Himachal Pradesh, and your payback period is going to be 18 months. Then you may be fine doing projections, because you're looking at raising, let's say, 50 lakhs in order to execute that particular project. It's fine to give project level financing only. You don't need to talk about your entire sort of solar startup business. But if you're looking to raise venture capital, then people who are looking to invest in your business will want to see forecasts beyond just your pilot project. So Shayanika, I'm not sure if I fully answered your question. Feel free to either type a follow-up or unmute yourself and speak up if you're comfortable. Hopefully that was helpful. Oh, sorry, I think you just put in a follow-up which explained your kind of startup. I'm sorry, I missed that. You said you're a food tech startup preparing natural meat protein bar. In which case you will definitely need to do some forecasting, because your unit economics is, in terms of the number of bars that you produce, or the volume that you produce. We'll need to see how profitable it is to produce at greater volume, sell at greater volume, and so on and so forth. So the answer is yes. Even if you're only doing pilot testing, you'll have to do some forecasting for at least 3 years. Shrenika, just feel free to, okay, we are working B2B. Okay, madam, hopefully that answered the question. Thank you. Okay, great, Shrenika. Moving on to Neha's question. How should we approach investors as we are change makers and there's no revenue forecast in terms of income? Okay, Neha, if you don't mind, unmute yourself and talk a little bit. So you're a social enterprise. So presumably, are you looking for investors into your social enterprise? Clarify for me what you mean by this.
Yeah, so actually, my organization is Learning Initiatives for India, and we work in several marginalized areas, and we mobilize the youth there who are like graduates or like working towards it or are interested in education fields, and we train them and we provide them curricula to train kids, to teach kids who are out of school or are very below their grade levels, and then those youth teach them in their in the learning centers which they create in their own premises or any community halls sort of things at so, and we also partner with local organization if they are working in that particular area, and then we work with them. They have the operations, and we train their fellows to teach similar kids. So our mission and vision is to like padhega har bachcha, badhega har bachcha, and what we are looking for in this event is like to have more exposure and more funders for our work. So, but like you talk about revenues and everything, so that's missing. So, what we can talk about is like needs and solutions. But yeah.
Perfect. Okay. So if I understand you correctly, Neha, what you're really looking for is not investors, but funders, right? People who will fund the program that you're going to be delivering. So the conversation is different. So obviously, you're absolutely right that you're not talking about profit making. What you're trying to convince people, saying that here the focus entirely should be on the impact and the cost of impact, right? So for example, for us to impact 3,000 children today, or 3,000 things in the next year, this is what our budget looks like. So please fund us. For if you give us, you can also put it in different ways, saying that if you give us 1 lakh rupees, that is going to help us to fulfill the mission for X number of children for the next 1 year. or you can translate it even in terms of, we want individual donors. If you give 300 rupees a month for the next 3 years, that's going to help to put one kid through the whole cycle. I mean, I'm just kind of giving you different examples of how to present this, but Neha, your whole pitch to funders is not about profitability. It's not about revenue. Obviously, it's about impact, right? So you're going to have to put that thing about saying, in order, by putting this money, you're going to impact this many children, and these are the outcomes for those children that you're going to get. That we'll successfully get so many of them to complete their school, or get jobs, etc., etc. So it should all be about the impact and the cost of that impact. And that's how you would be putting your pitch deck together for funding. Again, very similar to everything that I've been putting together here is for for-profit enterprises. So that's obviously not really relevant to you, but a good question. And hopefully that answered your question as well, Neha.
So yeah, just one more question for his
Sure.
follow-up. So is it more impactful to put this kind of thing in the beginning of the pitch deck, or like at the end you have to show the numbers and like first talk about the operations and everything?
Rather than operations, I would certainly tell upfront in the material what is the mission and the impact that you're driving to have, right? This padega har bacha, badega har bacha. Basically, tell that story and tell that in a slightly emotional way, right? Don't just put the facts and figures. You're trying to, in your case, you're definitely trying to have an emotional connection with potential donors and funders. So that is what you want to put upfront. Start with that and then explain, what is it, what does your program do? You will obviously be explaining how does your program work, how, how do your staff members or your volunteers work, and how does the model work, and so on and so forth. And this is what it costs to run the program, reach so many kids, reach so many areas, locations, whatever, right? And put those numbers in, and at the end conclude by saying, we're looking for this much money from you, and this will have this kind of impact. Would be the way that I've seen most successful nonprofit funding decks work. So if you put the funding ask up front, then you also need to have a very powerful appeal to saying, it really think about it as, the funding ask is very powerful only if you tie it to that emotional appeal, saying, by just giving, I'm trying to remember that wonderful sort of campaign which says that, I'm sorry, I'm getting old and my brain cells are dying, but it is fundamentally, if you just 100 rupees a day can keep a child from dying of malnutrition, that kind of impact. So if you're putting the number up front, it should be tied to that kind of powerful appeal. Otherwise, put the emotional appeal and the impact first and put the numbers last, would be my suggestion to you.
Thank you so much.
Sure. Okay, question. So again, Stuti had talked about a detailed document outlining the business plan in addition to the pitch deck. Okay, great. The degree of detail, the elements of the business plan are what I've actually called out in the deck, Stuti. So fundamentally that, plus your execution strategy, it'll have details like, okay, this is our marketing strategy, this is our R&D strategy, this is how much time we'll take, these are the facilities we'll use, these are the partners we'll have, etc., etc. This is, and it is important, by the way, it's fantastic when you say, when you are pending IP, talk about basically what are you doing with that IP? How are you developing that IP, and are you applying for patents? How are you protecting that IP? All of that should be part of your business plan for sure, because that is a very sort of a monetizable element of your whole your whole investable strategy, right? So at what stage of engagement should you share this document with potential investors? When asked. The pitch deck is what you send unsolicited. The business plan is what you send when asked. In some cases, there will be some competitions and contests for which they actually require you to send the business plan and pitch deck, in which case, of course, you can send that. But otherwise, business plan is only sent when asked. And that could be, generally, it signals that the investor is interested in finding out more about you. So that's good news. I don't see any other questions in the chat window. Does anyone else want to unmute themselves and ask one final question? I know we're kind of we're slightly 4 minutes over the hour, but I'm happy to take one more question if anyone wants to unmute themselves. If not, we'll close for today. Okay. I'm guessing no other questions. Once again, everyone, we'll close for today. Final words, Gunjan or anyone else, please feel free to speak up. Thank you so much for spending the time with me today. And we're always cheering for women and women entrepreneurs. We know what you do. It's hard, right? Whether you're a social entrepreneur, whether you are a tech founder who's trying to do something like Stuti and her team are doing, or whether you're a food tech startup doing, natural meat protein bars, whatever you do, entrepreneurship is hard. Running a business and founding a business is hard. We very much appreciate what you do, and we're supporting you and we're cheering for your success. So thanks all of you. I'll stop sharing the slide. One final thing, we will be sending this slide to you. And as I said, I've included one more slide which has useful links, which has templates, for example, for pitch deck, business plan, and so on and so forth. So hopefully you can leverage that when you're trying to put together your own version of your own pitch deck and your own business plan. I'll close there. Thanks very much. Any closing words? Or if not, Farisha, feel free to, I think, say thanks everyone, and we'll stop recording.
Yeah, thank you, Divya, and thank you everyone for joining us today. Divya, this was a very
Everyone, have a
insightful
good
session.
weekend.
Yeah, bye.
And happy Pujo to everybody in advance.
Thank you.
Thank you so much.
Thanks. Bye-bye.